All right. Cool, cool. All right, let's start sharing now. All right, a couple more people joining up. All right, guys, so hopefully you guys had a good weekend. Hopefully you guys did some preparation and you're ready for the market this week. But if you didn't, this is your time to kind of get caught up and prepare. So let's jump right into it. Again, guys, Angela's not going to be here, so it's really just going to be me diving into, the main pairs that I'm normally covering. Maybe we could dive into a couple others at the end if you guys want to suggest some. Okay, so let's get right into it. DXY to start. What is DXY doing? All right, so let's go to the daily time frame first. And this is what I'm going to do with pretty much every single pair is I'm going to jump to the daily time frame, assess the trend, then drop to the 4-hour and come up with 2 trade scenarios for you guys. Okay, so we can see here on the dollar DXY, not actually a tradable pair. We just analyze this, use it as an indicator for the market because whatever the dollar is doing, it typically drags the rest of the market with it, or you'll see some sort of major reactions coming off the dollar and other pairs. So it's good to kind of see what the dollar is doing, right? And we can clearly see that this is an uptrend, right? Strong characteristics of a bullish trend, higher highs, higher lows, breaking through resistance, establishing higher highs then, and then higher lows above that. So this is very much bullish, and we actually can see that we're near another resistance level right around 100. So this is a key level. This is going to be kind of a make or break for the analysis for this week. But let's get a closer look. We'll drop down and see what's been happening. Okay, so here on DXY, we can see that there's been some pretty high volume ranging, right? We're talking about a few percent on each swing here for the dollar, which is pretty sizable. It's a good amount of volume. But then this is the range here, right? Key resistance at 99.25, key support at 97.85. Lots of bouncing, at least 3 touches on each side. It's a confirmed range at that point. But we did see last week that we rallied through the range, continued pushing higher, very much in line with the other higher time frame trends, right? So where do we go from here? We need to see a reaction at 100 first, right? It's either going to start consolidating or it's going to push through that level, give us a higher low above maybe, or it's going to find reactions right now and send price action back into the range. Ideally, hold on, there's some more people trying to get in. Okay, so ideally, we want to see reactions at 100. In my opinion, the dollar is pretty overvalued right now, especially near this 100 level. If you actually zoom out, we can see very clearly that this zone has played a huge part in prior resistance. Back here, just massive rejection. And then also for a short while, it acted as support, but more resistance than not. So this is, again, a very key level and that we need to be aware of. Okay, so ideally, I think it's going to reject off this level, pull back into the range, and then we'll see a short-term bearish dollar, maybe for the next few weeks. But that would be nice to see. I'd like to see it come back down towards the bottom of this range, start to stabilize. But right now, it's just a little bit overextended for my liking. So just be cautious on the dollar. If it does break through this whole zone here, this 100 zone, gets a nice higher high, well above, and then pulls back for a higher low, then I would comfortably say, okay, this, the dollar really has a lot more momentum behind it. And now we could comfortably, consider it bullish again. But really, as long as we're around this zone, we have to be cautious. Okay. And yeah, if you guys actually want to check this chart out through the week, you can come over to TradingView, and these are all live charts, meaning you can click them and there's a play button. Let's say you're looking at this, this coming Thursday. You can click this chart, hit the play button, and it'll show you all the price action developed from now to Thursday. So it's pretty valuable in that sense. Can kind of help guide you as to what's happening and keep you kind of focused. So that's DXY. Let's jump over to AU here. AU is looking good. It's in a good spot, meaning it's setting up for a trade. But yeah, let's talk through this on the daily first. So very much bullish now. We were bearish over here, right? Very high, very large, high volume bearish channel, huge swings. I mean, look at this 500 pip swings, right? We broke through major support right here, 0.725, retested, got a lower high. Then we saw a double bottom. And then over here was when the transition took place, meaning this is where price action on the daily time frame was bearish and then went to bullish. This is where that transition happened. The whole change of trend was this. We broke this lower high on this surge of price action, came back down, got a higher low, and then continued to rally from there. So that's a classic break and retest, not the cleanest setup, but still that's what we're seeing here. and then it pushed up through the next resistance level, 0.74, all the way to 0.76. So this is a key level. We saw a lot of reaction from there. And this whole run here was a bit overextended. So we were ideally looking for structure into this week, but really, as long as we're above 0.74, we're looking more bullish, okay? So just keep that in mind. This is the key zone, 0.74. Let's go to the 4 hour for a second. Any more people I have to let in? Now we're good. All right, so this is the 4 hour. And this is where we saw, this is what we saw last week. Price action pushed up, then started consolidating. And then we had two analyses, one breaking the range to the upside, expecting 0.75 to be met, or break to the downside, looking for 0.74 to be met, where we'd be looking then for, higher lows, structure points to then enter long on. So what happened, right? We had the last attempt from the bulls. This was pretty much the last, pretty much the last attempt, their final push into resistance. And that happened right here into 0.76. And then it came back with the same volume, falling through the range and looking like it's getting pretty close to 0.74. So this is an area of interest, like we said before, right? This is the key zone that's going to kind of determine the trend. As long as we're above, we're looking for long scenarios. If we get below it, we're looking for shorts. So ideally, this is what we would see. I'm hoping something like this happens. Price action falls down to 0.74, maybe consolidates a little bit, throw some wicks, and then we start getting some minor transitions. And then we'd be interested in entering on higher lows like that after a brief moment of, consolidation, something that would be really clear. And of course, rejection doesn't hurt at all. Long wicks rejecting off this level would be perfect as well. So something like this is what we're expecting for this week. We'll be looking back towards 0.76. There's more people trying to get in. Hold on. Okay, there we go. Mike, you have a question. Not sure if you're going to do UJ, but based on price action, 4 hour supply, I feel like it's going to, yeah, we're going to get into UJ pretty soon. Let me just work my way through the rest of these. Okay, so this is what we're looking for. A little bit of consolidation and then, more bullish trend, situation. So we want to see that higher low and then continuation, strong bullish candlesticks that would give us confidence in entering long there. Now, what needs to happen for us to consider this bearish? That would need to be a clean break of 0.74. So price action is going to fall through this level, get a good presence in this zone, then pull back for a lower high, retest this level, get that lower high, and then we could enter short. But until that happens, this is the closer setup to happening. So AU could be a pretty good long opportunity. And what would this trade setup look like, right? We're risking about 60 pips, looking to get about 180. Just over a 3-to-1, not a bad trade whatsoever. That's a good amount of pips. So that's AU. Let's jump over to AJ. This one's still pretty crappy, unfortunately, only because it's overextended. So we're here on the daily. We could see that we are super bullish, right? The rally is from here. This is the whole push. Like, this is insane. 14% appreciation on AJ itself. Pretty damn close to 1,200 pips on that one rally. I mean, if you bought that, good for you. But if we were looking at it at this area, even now, there's no trade scenario. There's too much volume. It's too overextended. We need to see something, a little more clear. I want to see price action pull back, give us a higher low, give us some sort of maybe even consolidation, any sort of pattern. We're pretty much begging for structure at this point. There's really nothing you can do here. So ideally, we see price action pull back closer to 88 support. This is the ideal zone. Lines up really well with 61.8 fib level, 61.8% fib level. And this would be the area where we'd be looking for reactions. It would make sense. Price action fell to here, consolidated, and then started pushing up again. Because again, we still are primarily bullish, even if we get all the way down to 88. That's kind of our key zone here. Okay, so that's the safest, the most ideal situation is that we get a nice long opportunity. And then this is, I mean, it's almost 700 pips for a target. So that's nuts if that plays out. That'd be a very, very good trade. But let's talk through it a little more because we are pretty far away from that long scenario. So some of you guys may be, wondering, can we short into that level? Should we short it down to 88 support before, reanalyzing? And you could, but it depends on how price action forms, right? Now, it's a counter trend trade. This secondary trade path, this orange path here, it's a counter trend trade. So that means there's more risk present. Okay, that means because we're overall bullish, this is not guaranteed that it's going to drop yet. That's why we wanted to wait. So if you are taking this trade, you are accepting a little bit more risk. Okay, but this is essentially what it would look like. We need to see price action form a little bit more in here, get below 91 support, break, retest, get the lower high, and then, and only if price action formed in this way would we be interested in then shorting. And there happens to be enough volume here where I'm actually considering this, and I'll show you guys what I mean. All right, so down towards 88 support. It's pretty much, we'll play it safe, 270, right? And then to be safe, we could be even at 100 pip stop loss, right? And we're well over 2.5 to 1. So this could be a good trade, but again, it's got to be a 10 out of 10 price action wise, because the trend is not in our favor here, right? We're basing this now on like some 4-hour lower time frame stuff if this happens. So you just got to be aware of that. Okay, but yeah, I mean, if it does play out perfectly, gets a nice clear lower high, strong rejection, good bearish setups, you know, maybe an evening star, bearish variation, something of those sorts would be good enough to then enter on. And then you can kind of get like, it's like a 2-part trade, right? We short down towards 88 support, and then we close the trade or clip it, however it ends up, you know, working out. And then we'll then look for this scenario, which is a higher time frame trade, which would then support the overall, you know, bullish trend. It makes a lot more sense. We've actually seen structure at that point, and then we can gain confidence in going long again. And this should be, again, a big ass trade, right? We're looking at all the way up to here. It's called 630 roughly. And that means you could even risk 200 pips and still achieve a 3 to 1. That's massive. That's a lot of volume right there. But, you know, it's interesting to analyze. We are still far away from this happening. I mean, even to the 91 level, we're still 150 pips away. So it's gonna be a waiting game. This is definitely low on my list for this week, but you know, interesting to analyze and just talk through it. Okay, so that's AJ. Let's move over to UJ. And UJ was really good last week. We actually had a great trade out of this, and I'll walk through that too. Let me just size this up a little bit. So we're here on the daily. Again, all we need is the trend before we drop down to the 4-hour. And this is very clearly bullish, right? We moved up quite a bit here. We rallied 1,000 pips, gained almost 9% on UJ itself, came back, just tapped structure. It actually was very, very close to call, but it did tap structure there and then continued bullish, right? Which that was the trade analysis from last week. And quite a few members actually, we covered that on Wednesday on the small group webinars, and some members made out really well on this trade, playing it back up to 125. But let's drop to the 4-hour. We know it's bullish here on the daily. Let's take a look and see what this week holds for us. Okay, so we are at a supply zone. 125 is an acting supply zone, right? It's also resistance. You know, I just have it marked that way. So we've been forming really good structure here, right? We broke, this is a transition here, broke above, this is a higher low, continued, just really good structure coming out of this 4-hour time frame. And this is where our final TP was at 125. So it's almost there right now. But then where's it going to go from here, right? So this is a completed trade. We entered down here, even on here, played it up to 125. And now we need to see how it's going to react. Is it going to break through the zone, continue with this beautiful structure where we'll see a break above 125 followed by a higher low, and then continuation towards our negative 27% fib level? That's one option. I personally think that this is going to run into some rejection here. It's going to run into some, it's going to struggle a little bit. We're going to reject off 125. And then I would simply be looking for, you know, 4-hour structure. So a break below this minor level here, this higher low is going to break. We'll look for a lower high, and then we'll start considering shorts back down towards 121.25 support. So that's still 200 pips. Really good trade there. Again, depending on where this lower high forms, it's going to determine your stop loss, but it's looking like it's going to be well over 2 to 1, probably a 3 to 1 more comfortably, which is great, right? Another good setup here on UJ. Just got to see how it handles this 125 zone. We could also mark up the long scenario. If it breaks above, nice continuation to the upside. We're looking at 275, 275 pips up to our negative fib level. And then we would have about 55, 60 pip stop loss, putting us over 4.5 to 1. So this is pretty solid. Either way this goes, I mean, you just got to be patient, guys. Don't get caught on a fake. Wait for structure, wait for those higher lows or the lower highs. And then I promise you'll make out on a good trade. Okay, but be patient. It's coming. This one's definitely going to execute. one of these this week. I'm feeling it, and I'll be watching. So this one's pretty high on my list. Just waiting for that one. Let's keep going though. We'll move on to the next pair. Let me just check chat real quick. Okay, I'll get to this in a second, Mike. I'm going to do questions at the end. So let's move over to EJ, next pair here. And this one was good. A couple weeks ago, we caught a nice long scenario there. Now it's consolidating. So we'll drop down to that in a second. But let's take a look at the daily. So very much bullish. This is actually one of the nicest bullish channels I've seen on EJ in a long time. It took us right through 133 resistance. And this was also a higher time frame bullish flag. So this was playing into the continuation of that, kind of just completing the pattern. So that was really nice to see. But then we broke above 130, rallied all the way to 137, saw a bunch of rejection. Look at those wicks, right? Lots of struggle, lots of rejection, and now it's coming back down. Now we haven't broken anything really yet on the daily, so it is still technically bullish. So we'll need to drop down, go to the 4-hour, and see what's really going on. Okay, so here was that channel. If I could just, this bullish channel, it's just perfect. Look at this. There were so many entries on this. Even right here, this is probably the cleanest one. Break and retest of 133, nice engulfing for an entry, and then you could have taken that all the way up to 137. We also had a nice little analysis here a couple weeks ago, long scenario up to 137, played out beautifully. And then we were able to manage well because we could see that price action started consolidating pretty much immediately after that first rejection, started consolidating, dropped below this higher low here, and then started consolidating some more. So this has been in a, consolidation phase for a little while now, just about 2 weeks almost. And that's, not really a surprise considering the pair that we're looking at. EJ is super dramatic. I kind of say this a lot. Whenever EJ decides to do something, it does it 110%, right? It's like that friend of yours that's like the crazy, work ethic. It's just whatever he does 110%. That's EJ, right? EJ decided to go into, a rally here. It formed one of the best channels and it held that for a while, right? So that was this period, about 18 days, really, really good there. And then it decided to consolidate. So almost as long as that rally phase. We're at 14 days, almost 14 days right now. So whatever it does, it really commits to. And, that's what we're seeing here. We're clearly within a range. Minor resistance, 4-hour resistance at 135.5, 4-hour support right here at 134.55. And this makes it, I actually like ranges a lot because it makes it super clear to see what we need to get into a trade. And it's also super clear to explain, right? I mean, if we're going to continue long, we need to see this range break in a bullish way, meaning price action pushes above 135.5, comes back, gives a structure in the form of a higher low, and then entry candles, right? Strong bullish, setups, variations coming off this level. That's our entry. We're targeting back towards 137 at that point. So that'd be really good. Super easy to see, guys, right? And then the opposite is true if we're considering EJ bearish. We need to see the range break in a bearish way, meaning price action falls below 134.55, retests, get that lower high, and then boom, we're short. So this would be, yeah, we could size it up. Why not? That is not the right tool. We could size this up right here. And we're looking at about 130 pips. Stop loss would be a little bit closer than that. So just about a 2-to-1. Not the craziest reward trade, but, still a 2-to-1, not bad. Risking 1% to get 2. And then what's the opposite? We're targeting 137 for about 160. And this one's really good, actually. If we do a 50 pip stop even, we're looking over a 3-to-1. So not bad. Either way, well over 2-to-1, guys. Good trades here. You just got to be patient. My bet on this one is going to go long. Just because it's close to resistance. I really think it's going to break and then, continue. So yeah, we'll be looking for that. Nice 3-to-1 might be coming our way. But yeah, that's EJ. And let's jump over to gold. Gold is looking very similar to EJ in the sense that they're both ranging. Gold here is a little more high volume though. So let's get to that in a second. Let's go to the daily first. And this is, it's been super bullish, right? So, I mean, anyone who's been watching gold, if any of you guys, analyze this, you guys will obviously see that this has been super bullish lately. So from this rally alone, it took about 32 days. We saw 15% appreciation on gold. That's pretty wild, right? Very overextended. Finally, we saw rejection around the 2070 level, which is pretty close to the all-time high for gold, which is like 2074. So we came within $3 of that, which is pretty nuts. Then it came back down, and this is our structure point. I fibbed this 38. Let's take a look. I'll show you guys. Fibbed it from here. And this is our structure point, right? It's somewhere around the 50, but we've at least met 38 too. So just to keep that in mind. And then we have a key zone, 1930, and we're dancing around that right now. We're seeing a ton of consolidation. So this makes it really easy for us to see what, we want to get into a trade. And we'll drop down now, get a closer look. We are overall bullish still. As long as this 1930 zone is intact, we are technically bullish. But let's talk through it a little more. All right, so clear ranging. Resistance here at 1945. Support here around the 1918 zone. And we can see this has been going on since mid-March, right? Mid-March to now, 23 days of consolidation. Kind of sounds like a bad movie. And we've tons of fake outs throughout this. This is a fake out. This is a fake out here. And by fake out, I mean, these are attempted breaks. Like this is an attempted break to the upside, failed higher low. It didn't follow through. It looked like it was gonna. I mean, we were counting confirmations up to this point. It was looking good, even on these two candles, but we needed one more confirmation, and it failed on us. Instead, it gave us the bearish engulfing from hell, dropped us back into the range, and then threw another fake immediately. And, the down fake here is a failed lower high. Okay, see, there's complete lack of reaction of this level once price action dropped below, so that's a fake out as well. So we got to be careful here. There's some pretty big volume on gold, which is normal, but you don't want to get caught off sides, right? You don't want to get caught on the wrong trade. So be patient, wait for the higher low, wait for the follow through and the confirmation. And my bet is it's gonna continue higher. I'm looking for this to break the range in a bullish way, get some good presence above the zone, pull back, give us the higher low with the follow through. And the entry would probably be over here somewhere, right? Let's say the follow through is about to be there. Stop loss, we're going to drop it down to about 150 pips. And then we're going to target about like 550. So 3.6 to 1, 3.5 to 1, somewhere around there, your trade's going to lie. And that's being pretty generous. We could definitely get trades depending, again, how price action forms, a little bit lower or closer to the zone. But yeah, looking pretty good. There's enough distance here back to the 2000 zone where if this played out, you'd have a great trade and a lot of confidence if that higher low does form. Okay, it's all about structure, So what happens or what needs to happen for us to consider gold bearish? The complete opposite. We need to see this range break pretty aggressively, get some good presence into this zone, pull back, see that lower high, and then follow through with some strong candles, bearish candles like this. This is a great engulfing. If we could see that after some rejection of resistance, that'd be perfect. And then we'd be targeting lower, risking about, we could go a little higher on this. Let's say 150. Yeah, about 150 to be safe, targeting about 400. So we're looking at about 2.5 to 1, just over that. So good trade there as well. So there's some setups, guys. This is definitely going to be a test of patience for some of you. But I'm telling you, if you're patient, you're going to catch some good trades. And these are some big ones. These aren't like small volume moves. We got 3% on that if it executes. We got 3% to the upside on gold if it executes. UJ as well, upside, downside, big percent gains. So being patient is going to pay this week. But it's looking pretty good. So let me check chat. Again, guys, I apologize. Angelo, wishes he could be here, but he's mid-travel. But we just got this for now. His will still be posted later, his analysis. But guys, if you want to just come back and check these throughout the week, I can't reiterate this enough. These trading view charts are so valuable, especially the way that we're analyzing this through the week. We're not really we're giving more analysis, not direct trade ideas. So this plays really well. We kind of mark out all the opportunity in a like what we would consider a 10 out of 10 trade way, where you could catch a long scenario or a short scenario. So these are really good charts to come in and just use for value through the week. Compare it to your own, get ideas, see if you were seeing something wrong, and then check it with ours or whatever you got to do. So let's go through some questions here. Not sure if, okay, we went over UJ. Hopefully answered your questions on that. How do we know the minor levels are? So minor levels, I mean, let's go through this. I'm going to find an example here. So I mean minor levels by 4-hour zones, right? Opposed to daily zones. So like these are, if we're going to walk through it. Okay, so major zones are your daily zones, your higher zones. Those are really going to be your targets. Minor zones, I'm just talking about 4-hour zones. Okay, you've been doing supply and demand. Okay, it's good. Can you identify a fake out by candle formation? Yeah, absolutely. So gold was a great example of a fake out. Let's zoom in on the 4-hour here. So when I see this happen, right? Let's say I'm looking at this. When I see this happen, I'm thinking it's going to go bearish at this point. Okay, but I'm not going to jump the gun and short this as soon as we see a break. You know, I'm going to wait for candle closure. I know that we need to get a decent amount lower than support. So I'm going to wait for that to happen, wait for candle closure. I do see this wick happening. So price action there is telling me something that's kind of a red flag. That's way too big of a wick, right? You don't want to see that kind of rejection on a break of something, you know, but even so, let's say it was a perfect candle, you know, you would then drop down on that break and then look for retests. Okay, now let's play it forward. This is where I'm looking for essentially this here. Where'd it go? I need to see rejection from broken support. It needs to act now as new resistance and then throw some rejection in the opposite and you know, throw some rejection to the upside, off resistance, and then start heading lower with some bearish confirmations. Okay, so let's play this forward. I'll just go through my thought process as we're doing this. Okay, so it's pushing up a little bit. Pushing up, rejecting, rejecting. Okay, so this was a good sign here. This wick was a good sign. That is, this doji is a good sign because that would then say to me that we're setting up for an evening star. You know, we saw rejection on the retest. That's good. Now the next candle needs to follow through in a pretty bearish way. We didn't see that. Instead, it pushed up. So that says to me that, okay, this maybe isn't the real break. The bulls are not done. Let's see if there is more reaction. So I'll keep waiting. Okay, we got another doji. That's pretty good. The next candle, another doji, not so good. You know, it's stalling here a little bit. We need to see some conviction. Are bearish candles happening yet? No, they're still not happening yet. Nothing here yet. Nothing. That one's pretty decent, but not enough. Too small volume. We need something kind of, you know, relative to the size of these candles. That's how I'm measuring the volume in the market. Okay, so this is all low volume stuff. Can't do anything with that. And then what do you know? It actually finds support back off this level, completely failing to give us a lower high, any sort of follow through. So that's a fake out. And then on the 4-hour, you can obviously see that. I mean, look, failed lower high, failed follow through, no structure whatsoever. And then that's the same case with all of these. You know, it dropped below. This one actually looked pretty good, but then we got huge rejection. That's a red flag. You don't want to see that. And then there's no resistance whatsoever. Totally disrespected. Price action blew through it. Now this one up here is a little trickier because this one set up really, really well, but didn't execute. Okay, so let's zoom out here. So this was a good break and retest right here. So we were looking more bullish here, right? There was a brief period of consolidation. Price action started moving up. We started getting some higher lows. Finally broke above this, through this resistance zone, right at 1950. And then we were waiting for a pullback. This is the point where we're waiting for that higher low. We saw price action was pulling back. Good. We're seeing some rejection. This is a good sign. This is what we want to see. Nice rejecting or rejection off support, acting as new support. And then we're starting to see some bullish candlesticks come in, which is good. We got 1, 2, and then I would like to see one more because that would be a bullish variation. But then what do we see? We see a giant wick. That is a huge no-no. That's not a good trade. That's not confirmation. That's the exact opposite, right? And then on top of that, we could even do this. We could see that we have a minor level right here, which is where, so this is the minor level because this higher low is broken. It pushed lower. Now it's rejecting. If this third candle, if like another bullish candle closed above that, that would have been your entry. It was literally that close from executing. Everything else lined up perfectly, right? We had a breakthrough resistance. We established a high. We came back. We saw rejection. Now we just needed that higher low to confirm, literally on bullish variations, which just didn't happen. Very, very close. But let's say this did push up. Let's say this wick wasn't here and we got one more bullish candle. It closed up here. That would have been your entry right here. And then we would have targeted, you know, much higher, back up towards the 2000 level. But instead, It found resistance right here at this minor level, 1955-ish, 57 area, and then dumped. So that was a really hard fake to spot. And a lot of people got burned on that one. I'm telling you, a lot of people did. But that's why patience pays. You got to know how to read the candlesticks, and so you don't get caught on these fake outs. But yeah, that's how gold turned out. Tons and tons of fakes. So we're not going to get caught on that now again, right? We're waiting for the real higher low and follow through, or the real lower high with follow through. Let's go back to the chat here. And the UJ entry, is there manipulation on sell? I'll go back to UJ. I'm not sure what you mean by that. I might be interpreting it wrong. Let's see what. Okay, so whenever we see a break with a nice size wick, it's potentially a fake. Not necessarily. I mean, it just in this scenario, because we broke support and then you saw rejection. Like, you don't want to see where you're looking for bearish strength. You don't want to see bearish weakness. Do you know what I mean? Like, we just broke support. That's the moment where we want to see bearish strength continue so that we can keep shorting. And then we see rejection, bearish rejection. That's not good, right? The bulls are stepping in there. The bulls are pushing price action back up. What time frame do I read candlesticks? I read candlesticks on every time frame. Not really sure what you mean. AJ is trading in a pretty tight range on the 1 hour. Would you consider trading a break and retest in other recent 4 hours? So, okay, good question, Jack. So this, I wouldn't take a trade between these two zones. At most, I would consider a short on a counter trend trade with a nice lower high below 91, but only if it's a 10 out of 10. Because like this has to break, retest, print a lower high in like the most perfect way, and then follow through with some bearish variations. That's really the only thing I'm interested on AJ right now, because there's just such a lack of structure, and this is crazy high volume, like 300 pip swings at this high. It's kind of ridiculous. So I'd ideally like to see this short. I won't take it if it's not a 10 out of 10. It's very likely that I could just price action here could just dump straight to 88, which is where my long scenario is anyway. But that's why I have this analyzed on the daily, because it's just not looking clean. There's a lot of risk here when you're seeing this type of movement. AJ, it's in a bad spot. How it's been moving has been pretty bad. Jeremy, how does one open multiple positions? How does opening multiple positions help with risk management? Well, you could scale into something. It's not really like adding more trades would help with risk management. It's like your risk management is good or it's not. Because like a lot of people do it wrong. Like they'll scale in wrong where they'll use the same percentage on each trade, or like you shouldn't do that. If you're going to scale into something, you got to make it. I'm trying to find an example here for you guys. I mean, I'm gonna have to make one. I'm gonna have to draw one up. All right, here we'll actually do this on AJ. So if you're going to scale into something, you need a 10 out of 10 trade followed by a 10 out of 10 trade. So let's say here for hypothetical purposes that we're looking to short here on AJ. Okay. We know that trade. That's going to be part 2. So part 1, let's say we are shorting this just for the sake of analysis. We're going to short this and talk about scaling in. So this is a 2-to-1 right here. We want to get a 2-to-1 by this support level. Okay. Ultimately, we know that we have potential to drop to 88. Okay. But we need to at least secure a good risk reward by the next major support zone, which is going to be here, 91. Okay. Now, if price action breaks below this, this could be a scale-in opportunity, right? If it surges and you're watching the price action, you're reading the price action, the volume is really, really bearish and it looks like it's going to break, you could hold on to this trade, target down towards 88, and then look for another trade opportunity, which could very well be a retest of broken 91 support, looking to test it as resistance, and then we would be looking to short this one, like so, down to the same level, 88. Okay. And now, because let's say you had 1% on this trade, you're not going to open up the same trade with the same amount of risk, right? Why would you do that? I would drop 0.5% on it and then manage them accordingly. Okay, because look, this is like a 5-to-1. You'll be able to get an extra % or 2 out of the trade, the same trade, if you did a scale in. But it's got to be you got to be playing to the same rules. You can't just be taking trades because it's got to be, you got to be looking for structure. It's got to print itself in like a 10 out of 10 way. It's got to be absolutely perfect. I only do scale-ins maybe like once a month, once or twice a month, not really that often. It's got to be really, really clear. You don't want to screw yourself on a bad secondary trade and then compromise the first trade. That's why I always reduce the risk as well. Okay, so hopefully that answered your question. Let me go back to chat here. Yeah, Jeremy, hopefully that answered. And then Andres, do you take your entries on the 1 hour, and how many confluences do you need to take a trade, like a certain amount? Yeah, so I'll actually execute on the 1 hour or 30-minute, but I'm looking for confirmations on the 4 hour. And then when I see something shaping up, like let's say I see like an engulfing, or we just broke a major support level on the 4 hour, I'll then drop to the 1 hour, look for those confirmations, and anywhere from 2 to 4 will be good. It just depends on how the price action forms, right? I want to see that lower high in the area that it should be forming, and then reacting the way that it should be reacting. Okay, guys. Yeah, so hopefully that answered most of your questions. Again, guys, I went through a quick recap here. Covered DXY, AU, AJ. Ooh, look at that. Yeah, there we go. This thing's dumping right now. So look for reactions at 0.74. All right, so we covered AJ, UJ, EJ, and gold. And I'm telling you right now, guys, a lot of these are going to play out. So jump over to TradingView. These are posted in Discord and Telegram. Look, I'll just show you. Look, you can pull it up, and there's this play button, and how price action progresses through the week. It'll show you depending on when you click it. So use those. But yeah, guys, it's been another Sunday Market Blitz. So if you guys need anything, jump in the Discord, Telegram, reach out, and I'll guide you best I can. Until then, enjoy the rest of the weekend, guys, and let's get some really good trades this week. We're gonna kill it. Looking solid. Yeah, guys, no problem. Take care. Peace.